Could you please? Could you please? Could you please? Could you please say the fire now is closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Fire, take my hand, I'll take you higher than you've ever been, than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in. And let's take a look. I was looking at the last stream from yesterday. I should have just listened to my first intuition when I was looking at this. Look at me all spaced out, but you know, I was like looking at it, at these lines, you know, these in their intersection. I was like, you know, just the idea of the liquidity building up, you know, you got to trust where the liquidity is, and that's that mean reversion, you know, the mean reversion, reverting to the mean. What does that mean? What does that mean? The mean reversion. Well, mean is the average, right? So your moving averages, your price averages down to the fair value of this impulse, and that's why you have the impulse, the retrace kind of gives the narrative in there, and that's why I use these trend-based fib extension tools as well. Like you could take this and do that, and it ends up going down to this fib as well. It's a 22k bounce right there, boom, right off the wick of the impulse here. And so these trend-based fib extension tools are essentially your map, your journey for where these bounces will occur, rejection, and then retrace down to this region. So this bearish projection is basically complete from that impulse now. Pretty wild, right? Fibs are amazing. So you should take off all your indicators and just look at the fibs and try to get, you know, those mathematical pockets of clarity before you put lines of support and resistance and just have millions of horizontal lines on there. Just get your fib levels straight first, because those are where it mathematically likes to bounce. Like, come on now, look at this. This is pretty amazing. All you need is 3 clicks and you would have had this journey complete. And I've done that before. Like, and it freaks me out too, but you just click the first drop and the retrace to the top. That M pattern basically had the journey to the downside within it, and had where you get rejected on the 706 here, and then you come down into this 168 region. We could continue lower even. You could go down to this, you know, 21.4 region too. So we'll just leave that up briefly, and we'll just look at the liquidity to just get a sense of, you know, where we stand after all this. Liquidation levels. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment. All 3 of you. So, let's look at the... Where is it? We can close this now. And close this one too. Let's get it to load, if properly loading. Come on. You can do it. Why is it taking so long? My internet's slow today. Alright, so we got a massive imbalance to shorts on the 1 minute time frame now. They just came and gobbled all of that. Like, we were just looking at, you know, this 22.86 region, and then they just went, nope, all of you gone. GG. And knocked them out. So now you got realistically a sparse location here on the 1 minute. The 1 minute, it depends on how much they're planning to attack. So here, I'm gonna pull up a framework thing that I have in the Momentum Master Discord. Some assets that I made a while back. Why is everything so slow? My computer should not be slow. All right, so here we go. The retracement. So we had everything kind of pull back suddenly. Let's say we're here and we pulled back, and then we consolidated, and we're consolidating. So realistically speaking, you should come back for these fair value gaps. We've gone over in the live what a fair value gap entails, but basically you have a retracement after something like this, and that knocks out the gaps and the people that are short, that are in profit. And then if it intends to continue further, then it just goes and knocks them out at that void filling in part and continues to the downside. And so if you go to here, you have a bunch of 25x and 50x players that they could realistically come back up in a similar fashion. And obviously this was a fair value gap as per this box that gets drawn on there. If you're having trouble trying to figure out how to do fair value gap, there's this free indicator that is available called Fractal Break Imbalance Fair Value Gap Liquidity Void, and you go and you turn on the breakout imbalances and other imbalances, and it will automatically draw these on there, which is pretty nice. But this is on this 12-hour time frame, so the more precise you go by dropping to lower time frames, the more you'll see where they bounce up, and it removes those boxes for you. So on this 5-minute candle would be your more precise liquidity void region. So where it wicked briefly for a second here and went up here, this cleared a part of the void. So the true void parts are here and here and here. And so if you don't have high block capital like what we're doing here, you can kind of gauge what we're doing with high block capital, and these voids will contain these open trades of liquidity. And this is what smart money concepts do to kind of gauge where liquidity is without having these tools. High block capital is about $70 a month, so you're getting that free of charge with me. Thank you for joining me. And you would be seeing these pools here. That's why you pay money for it. They show you where the open trades are, and by 228 million here, you get this long amount here. So you can use this visual on the right, or you can use the bubbles and their size on the right. This is different from Bookmap, by the way, because Bookmap is can change. They're spoofing, as some other YouTubers might have talked about, which I told them about. The spoofing is where they dangle the carrot on the stick and then move it over, and it's just steering the horse of price action in left or right, up or down. And so saying 500 Bitcoins up here doesn't mean anything on Bookmap. That's why I don't like Bookmap as much as High Block. High Block, these are literally open trades and they're in profit. And so the market maker, the exchange, whatever you want to call them, doesn't want to keep them paid. If they don't close their trades out here, they will come back to get them, similar to that dragon going up to fill the void. And so if you look for it to go up, it will at least knock out these 50x, because they're getting 50 times their money every time it goes down. So why would they want to pay these guys? Why do they want to pay the longs too? And that's what you constantly ask yourself. Why are these so stacked up here? Why would they keep going up and paying these guys? And that's what we're doing when we go over the liquidity pools. The liquidity pools are key to understanding where price action will go. It's like peeking behind the curtain of the matrix of trading. So that's why High Block, and that's why I'm obsessed with Bitcoin, because you're literally getting how trading works by seeing it juxtaposed with these pools. You're seeing what the market maker sees, and I'm sure they have tools that at their disposal which are much more beyond this tool. We'll catch up to them, don't worry. We will catch up, I guarantee you. So anyway, they have these 50x here that they could come back for. There's a lot here and they're in profit. And then you look at down here, you have some pools, but obviously you're imbalanced by 12 billion to shorts. So, for all intents and purposes, even though this is like a channel, you could inverse Bart Simpson back up and just say wham bam, thank you ma'am, to that on the 1 minute time frame. So we'll just leave the 1 minute time frame open and running and move to the heat map. And as you see, it's getting hotter up top here on the 12 hour. This is only 12 hours, so it's very limited in what it shows. So it's just a quick shot, a Polaroid, if you will. It's not so deep. And here's where we go deeper. So we started to see this, and we went in detail about how there's these billions here. This was kind of even Steven on the 7-day, but now it's no longer even Steven. They have this up here. I like as I've been saying, the two that I've been looking at the most, the 1 month and the 3 month, and I was seeing this caked. I've been saying it day after day after day. It's just caked with liquidity down here, caked. But this is getting thicker too. And we were talking about how the 26K region was getting mighty hot on the yearly. So how far down do they retrace? I was saying they will come back to this pool. In my mind, they will come back and free that 170 something billion that's up there. But how much do they eat of this first? How much of their fill do they get here before they go up to here? That is the question. How much of the retrace is there? All right, so 3 month will give us a better picture. We understand that the pools from the lower time frame get less hot, so those hot signatures we were seeing on the monthly get less hot because the value of what makes it hot goes up. So here you see it's 45 billion for every yellow, 45 plus billion for every yellow. So you could just say there's 45 billion here, 45 billion, 45 billion. There's more yellow here than there is here on this time frame. So are they going to keep going down to eat this 45 billion plus caked liquidity? There's no blue anymore. It's just green and yellow. Who knows? Let's go to the 6 month. I'm trying to speed it up a little bit. We can go into more detail if you please, but we're just going to speed it up a little bit because the open will come soon. So you got 70 billion up here. You got 65, 40, 68. So you still got this caked amount here as compared to here, just looking at that. The yearly is where I start to kind of like rub my hands together and just guess what's going on here exactly, because you got 178 billion in short liquidity up here. Let's zoom in. So you got 178 billion, 104 billion, 72 billion, 114 billion, 73 billion, 121 billion. This got stacked. This was previously sparse at 47 at 26.4, and now it's up to 72. So they filled this one, and see, that's what they do. They induce and they fill these like conviction bubbles of shorts. Like we got this. We definitely got this. Just like they had the longs. Like we got this, bro. Double bottom at 19K, and they just went. Snatched him up, knocked him out, and went up in the shorts. Like, we got this, 10K, and they went and got him. It's just a game of traps. There's nothing more beautiful than this image right here, because this proves to you how much of a game of traps this is. It's like Prince of Persia. They got these wobbly little platforms you jump on, and you're like, we're going to the upside, and you fall on the spikes. And then it's just you invert it, and it's the same thing. Like, we're going to the downside. Fall to the spikes. So are they going to fall to the spikes to the shorts up here? I don't know. Prince of Persia, the trading game. So you got a lot up there. I mean, I was just shocked that when they were up here and they just didn't go up for that extra 140 billion. Like the amount of restraint to not go up $400 more to grab $140 billion. I was like, what in the world? But I guess they had all that much more down here or whatever. So yeah, how much of a retrace do we see? This was a run for profit Friday, they call it. So you have false move Monday, Tuesday and Wednesday, generally the move of the week, but it went kind of sideways on Tuesday. Wednesday it went up. Thursday was the midweek reversal. It reversed and it reversed to the upside. And then run for profit Friday just ran for the profit, ran for the liquidity, just went, thank you. And so is it over? Are they going to just inverse Bart Simpson up and say thank you on to both sides? That wouldn't surprise me at all. That really wouldn't surprise me, although let's not speculate about it. Let's actually look at it again in more detail and then go into the indicators. So you got a lot down here, but this will change the sentiment to lose this support completely. Will change a lot for everyone. So we'll leave this open as we go and just kind of juxtapose with the levels that we see. We'll keep this here too on this. We can remove that now. Actually, let's move it. Let's move it here and kind of actually let's go to. Let's see how the stream is doing in a minute because it was lagging earlier. But that's just amazing how it bounces off the Fibonacci's of those trend-based fib extension tools. You'll never use poles again if you get into these. They're pretty cool. But yeah, so the next place would be there, 21473 intersection point. We broke into this channel, disproving this upside bounce potential on here. So next level of a bounce would be down here, although you would get support here and kind of like go down here and maybe retrace up, bearishly retrace down. Just looking at that there. And yeah, let me see the health of the stream real quick. No, much appreciated, man. Thank you for stopping on in. So, let's go to here. So it broke through this golden pocket here. I was saying mine this region after it grabbed that liquidity, and it just went and negated all of that, and it bearishly retested 706, which indicates this could possibly continue to the downside more. I find it hard to believe they would recover at least 50%. Tino always talks about them coming to recover 50% of the vector. You know, I'll give credit where credit's due. I didn't make up any of this stuff. I just studied all around town. And, you know, shout out to Trader's Reality. Tino always talks about coming back 50% of the vector candle. This is a vector candle, obviously. And, you know, coming back to the 50% region would also coincide most likely with the rejection at the 618 of this bigger impulse here. So you put these kind of pockets of external and internal liquidity, and you find the confluence region, and most likely that's going to be the 50% region here. So this would be the 0.5 of this fib, and then also happen to be the 618 of the external. So that's kind of interesting. And yeah, you don't need to draw trend lines just yet. Not everything needs to be in a bull flag. We can relax, you know. Not everything needs to be like housed in some trend lines. All right, so let's look at the B. So we had bullish divergence on the money flow. So this is where a cool thing about the money flow being better than the RSI in a sense, because you know you had this deviation. You had the money flow dip down and want to come up, and it came up to the RSI and dumped down out of that. But that value of the money flow coming back in after that dump is a bullish divergence on the money flow. So are you getting this re-entry after the liquidations of the longs, and then they're sneaking their positions in off their carcasses? You had the bearish divergence appear on the RSI, or no, the money flow again. Oh yeah, that's another peak here. And let's go to a higher time frame. Well, first, how did the daily? This is my first time looking at it all day, so it's exciting to figure this out together. So we had the daily kind of start to curve, but it could easily just fade out and then come back down again. You still have the Williams coming down out of here. So this is where not just using stochastic RSI becomes important, like using the Williams in conjunction with that Williams %R. Now the Momentum Master did some back testing and smoothing and things to make it more accurate, where when you get these alarm crossover events, then likely you're going to have a massive dump even though we were low on the stochastics. So this is when the stochastics fail you. You see, you have the low stochastic here, yet we dumped out because the Williams was still showing strength to the downside. It was overbought. And so you want these in conjunction. Ideally, like when Momentum Master turns green at these back-tested levels, it will show you in conjunction with that will be your bounce. And that's why I had the fortitude to see that even during the FOMC as a valid upside play. Here, we're not in that green region yet, so you could come down a little bit more. We did invalidate the 6706 region, even on this daily fib. So, and that could be because you're getting, let me turn this on real quick. That's because you have the weekly not in your favor. So you got the 4 hour, the daily, the 3 day in your favor, but not the weekly. Isn't having a real nice screener there really quick saves you a lot of time, doesn't it? So the weekly goes to, the weekly basically could double top, of course. Anything's possible. You got the Williams kind of coming down to a certain point. And where was that? The last time we were up that high was at 60K on the Williams. That's not that good. Yeah, so this is when the rockets and the stuff were really nice because you were getting low on the Williams. So that was like a really good opportunity. Are we going to see continuation? It goes down and kisses the moving average of this and continues higher, double top. I have no clue. A lot of this is novel to me too. So, but we do have a Golden Cross event on the 2 week. I was pointing this out with Peyton in the Momentum Master Discord here. The last time we had this was back in March of 2019. So this is quite interesting. We had a Williams crossover event back there, and we're getting another crossover event on the 2 week. So could we see that run up to, like I said, I think we're going to that 25K liquidity. It's just a matter of when. Like, when are they done knocking out the longs? Was this the move? Or are they going to continue one more leg down before they go up? I have no clue. But interesting to note that they have this on the 2 week. And let's go to 12 hour. No, 22. My 22, baby. Let's see what the 22 has to say. So the 22 went up. You had hidden bullish divergence on the money flow, and that's what kind of kicked you up a little bit, but it was kind of hidden and it was faking you out. It was here, then you dumped down out of it. Now we're going down here. So yeah, you could, it was a very uneventful 22 hour that took us up to the overbought regions and dumped all the way down to here. So could they do a hard reset? This is definitely not the place to long a 22 hour time frame. You kind of want it in this pocket with a nice Williams down low, everything nice and low and staying low, and just starting to express itself nicely here in this region as it shoots up. You know, this is not the point where I've seen where it does good things, like, you know, back here when it was low and it comes up to this region, kisses, and then sends it up here, and you're already up and you don't come down. So we're already up here and we didn't really go, we went down, not up. So not really liking the 22 hour right now. And going to the 12 hour. I rode my bike home, so I'm a little bit like, whew, pumped up. I had to work. I tried to rush home as quick as possible. So, the 12-hour Williams, we talked about the suppression of the Williams, and sure enough, it did suppress that 12-hour time frame. and then it suppressed it from expressing itself here a little bit. It did come up, but it struggled. It was struggling the entire way because this Williams keeps pushing down on it. You gotta mind them in conjunction. I don't just have these extra lines in Momentum Aster to seem cool, you know? It's like I back tested all of this stuff and put it in there for a reason. All of it, including the leading MACD and the PVSRA and all of this stuff. And I could tell it to you like how it works. And it's a shame people didn't make the time to listen to what I was trying to put it out. But we got an awesome community of people. We got people killing it, people trying to get funded using it, people that are already funded that use it. So it works. I believe in it. I know it works. So you got the MACD crossing down here, the leading MACD dumped on us, and you got that let's see how leading it was. So let's put the vertical line here on the MACD. Where was it crossing over? So it crossed over back here. So if you just went off the leading MACD cross, you were crossing down on the MACD here, back here. And so this is stuff where I'm taking note where I could have been more convicted in the downside play that I put out up here and just ride it because the MACD is still crossing down and with no signs of crossing up. And we don't need the histogram, but you can put the histogram on too. So the MACD, like, you can cater this to the way you like. It's not my play style is my play style. Smurf has his own play style. Heikingashi and all that stuff, that's him and Peyton, and it's cool and it works. Like, I'm trying to learn it too. The thing is awesome. It has its own, like, you can write your own playbook with the tools that are in this thing. So you have the histogram on here. I think you could see that, and you could remove the PVSRA too and just see the histogram with it. So it's a leading MACD formula because it's normalized in the framework of 100 to negative 100. It's a normalized MACD. Normally the MACD's infinite in value, so it goes all over the place, but this stays in this framework. So it leads because it's very sensitive. Each integer, each value of 1, 2, 3, 4, 5, 6, those values are very sensitive to the movement, so they cross quickly, and you can get alerts on that on your phone. You could set it on any time frame. So if you want to get a 6-hour cross in the future, you could just set a pump and dump thing and it'll say dump. I made it very simple and intuitive. So when it crosses down, it says dump. When it crosses over, it says pump. Pump or dump. And then you could say perpetual, once per bar close, and you could say open-ended, and it will stay there forever on the 6-hour time frame. And you could just have it let you know every time a crossover of the MACD occurs, which occurred here, and then you'd be like, I don't believe it until it crosses up again, and then it didn't, and you just could have wrote that down alone. Very interesting to note. So that's the 6-hour, and the 6-hour, let me turn off the histogram because I don't need it on right now. Histogram off. Oop. And that's the 6-hour time frame. So you're getting low on the 6-hour. The Williams is not in that green zone just yet, but you still could see it curve at any moment. Anything's a possibility. Let's look to the 4-hour. 4-hour also in that pocket, getting nice on the Williams too. So you got this I'm liking. 4-hour time frame looks good. Now we're starting to see some goodness on the 4-hour, and you have all this stuff here too on the lower time frames, 4, 1, 15, 5. So you could just get a quick glimpse at the stochastic information and the RSI really in an instant, and that helps you to screen out tokens quickly too. So you can have people putting out calls. The whole motto of this indicator is be your own guru. You don't need me, you don't need anyone else. You can be your own guru. That's the idea anyway. Be your own guru. Alright, so we're getting a MACD cross on the hourly, and we got you got the RSI was previously low. MACD cross, the Williams getting low, but still not in that green zone. Technically, we've been just going trailing up. So ideally, you want to see, like, you know, just me saying what you want to see in a healthy long, even just, you know, some sort of double bottom of some sort. Like, we didn't even reclaim the wick here at all. So, you know, finding when they would reclaim that would be a better long play. But you got these fair value gaps that are up there too. So the hourly is meandering and curving and not showing conviction. Everyone's kind of freaked out after this move. They're probably waiting what's the dollar going to do. We'll complete with what the Momentum Master A is saying. And so even with the diamond, you could have just taken the diamond here in conjunction with that and wrote it down. I'm constantly impressed at what sometimes when it works. Like, I'm just like, I mean, I know how I made it, but how it looks at so many different things that a human can't be looking at, that it just it never ceases to amaze me. So yeah, the hourly is kind of meandering around, but I've seen it go like, it just kind of goes around like this as it goes up, similar to that image I was saying. Like, you know, it just kind of goes up and it never goes down to create that double bottom until it gets it gets the void cleared, and then it goes down with conviction. You know, that's a possibility. You know, just it never goes for that double bottom, and shorts keep adding on as it goes up, appearing to be weak, and it appears to be weak as it goes up. So that's just something to think about. Let's throw on the multiple stochastic just for giggles. For giggles. Giggles and wiggles. All right, so you got the 30-minute here, kind of coming down, and that's what's causing the curve on the hourly. You see how this interaction occurs? It's very fascinating. So you got the hourly curving down as the 30-minute kind of push down on you, and then they come back and sometimes kiss and then like bounce off each other, get recharged, so the 30-minute could curve off of the hourly, and the 4-hour is down here in fuchsia and teal, so you could get this curvature of the 4-hour in conjunction with that here, and you could get these, you know, kind of, the hourly gives some juice to the 30-minute, and then this also happens to curve the 4-hour, and you could see that going up. So even though this looks weak, you know, it could, you know, have some weird transfer of momentum there, and you can see this happen. They go up to the 4-hour right here, and then they both get rejected by its downside, and even the values of it are the same. It's so weird. It's like it's literally there, and they're getting rejected off of it, even though that's a different time frame. So the different time frames do have some sort of weird interaction, some spooky action at a distance, if you will. So that's cool. That's a cool feature. And you don't always have to have it on. You know, all of these things are toggleable, so you can turn them on and off as you please, as you gauge, as you do what I'm doing right here. And you could just have your stochastic. And the reason why I have the money flow overlaid with the RSI, like, that's also not because I want to look cool. It's because we talked about the money flow index being the volume weighted RSI, and the volume weighted RSI is a derivation of the RSI, but with volume factored in. So when the volume leaves, it changes the value of the money flow, and then so the money leaves, it goes beneath the RSI. And so you can use these disparities to kind of get some information. That's why I made it gray, so it's kind of like the subconscious of the RSI, and the subconscious reflects the money coming in and out. So it's money flow but it's not just money flow. It's like a different facet to look at the RSI. So why not overlay it with the RSI, So that's why it's overlaid with the RSI. And yeah, so you could get that kind of interaction here. You're getting a finger now. This finger is the higher time frame possibility of suppression not being in your favor to go up. Right here, this is it's a long story, but it's the baselines on higher time frames. Let's just put it, let's boil it down to its essence. It's the baselines on higher time frames. So I want to see what the 30-minute was looking like, because that was the thing that was pointing down and attempting to get some energy from the hourly. So it was keeping the hourly down, and then now it's trying to get that push. 15 minutes, all sorts of wonky here. Let's turn on the higher time frame for that. Alright, so you got, and then the MACD sometimes interacts with it too. Like you literally get like kind of resistance that it breaks through on the MACD that traverses both fields. It's weird. It bounces off of the MACD sometimes, and you're like, okay, why did it do that there at 17.27? That's where the MACD is. What? And you're like, okay, it's whatever, but it happens, and it gets resistance there sometimes and bursts through it. You could stare into this and find the spooky action at a distance on many different tools within. It's about how much time you spend with the tools too. Like as I learned more about these things, like what is the money flow index, and then it kind of works with the RSI, so I put them together. Like you get that bearish divergence on the money flow, it's above the RSI, it's going to come back to it, and it does. So that's why they're together. Everything has like a rhyme and a reason to it, So looking at, you had a green vector that got immediately rejected and somebody sold off into it, and I don't really glean anything off of this except for the 30-minute wants to like push up. And so the 30-minute on the higher time frame of the 15-minute here is going to look different than the 30-minute too. So if I go to the 30-minute, that wave is going to be this thing. So this thing gets expressed differently on the 15-minute. So because it's a higher time frame, so that thing becomes here. You see what I mean? So the 30 minutes like top becomes the bottom of the 15-minute, and so you can see that top wants to push this 15-minute up and become a double top on its own time frame, and then that double top is getting pushed by the higher time frame of the hourly, and the 15-minute is below that on here. So they kind of appear in different images on the time frames you're looking at, and so they have different interactions as a result. But it has to do with the math is accessing that time frame to draw it. I might have lost you on there, but it's fascinating. So we're gonna, enough oogling and ogling. Let's just get to the point here. Where is it gonna go? All right. So it looks like it's continuing down. What are they aiming at? Are they just aiming at, it looks like they might be just grabbing a quick 21 million that opened up here. They're underwater right now. They're trying to get, they got that guy. And they're gonna get this one. It's kind of sparse all the way down to 22.1. 22.100 doesn't really have anything. So I was not expecting it to go down. So this could be like a fill area for some sort of inverse BART if you're, trying to like fill the gap or see how much of the gap it goes, like you could look at. It's definitely not a good zone though in terms of confluence. You broke out of these things, so you could easily continue down to these other regions too. We're in no man's land right now, so 15 minute. So the 15 minute could come down here, but it could bounce based off of the 30-minute double top scenario with the hourly in its favor. So we already expressed that this double top on the 30 could be the hourly giving it some love. Even though the hourly looks kind of weak, it has the 4-hour support that we already saw in person. So the 4-hour could curve up here and push the hourly and the 30-minute and the 15-minute up. So we could see that return to this fair value gap, get a rejection at the 618, and that's where you would see like a continuation down. That's just where it's saying the imbalance lies, you know, just looking sheerly off of that. 23. Oh, and somebody just opened a big short right there. What? You're kidding me. They just opened up a huge short there. They induced somebody big time. They induced somebody big time there. So they got more shorts open at that moment than they did longs. See, 89 versus 176. So they're caking this level. That's the footprint of where they want to go. Right there, 23K 0.3, and then that would be right there at the 618. 23, like wicking just slightly above the 618. So that's telling me right now that's where they want to go. So it's like, all right, they're wanting to go up to that region. Let's humor them and see what they'll do. And then I want to go see what this, where did they actually go? So while we let that percolate, I'm going to go see what they recovered over here. So I'm going to go here and investigate the fair value gap that they recovered on where was that, and what did I miss in that. So it bounced off this for support. And so this fair value gap was already reclaimed down to here, but basically from here to here is still a possibility. And that's how you like kind of see where these bounces are. I don't know why it would bounce off this region exactly. Like what's special about that? Let's go here. Alright, so let's just take a look at the 4-hour here. So that is yeah, they induce somebody right there. That's the meaning of induction. They induce you to enter, and then they move it immediately away from where you entered. And then they might flirt around with giving them profit to keep them convicted, because then they might just close indefinitely. Like they don't want to scare the fish away, so they got to gauge them and see if they're, you know, willing to sit through drawdown or not before they inverse up to there, or just meander their way up to at least. And so the cool thing about high block is you see this pool, right? So you see this gap, so it tells you where things could chill out, and that also happens to be where there wasn't like a fair value gap where it like traded evenly for a moment. And so that's where, you know, the conviction where they remain open in profit and they're just safe, they feel like they're safe. It just happens to be where those pools and the fair value gap are, and that's why it's called a liquidity void, because the liquidity is just chilling there without being contested ever. And so they become targets. They become targets because they have not been contested and they feel like convicted, and your conviction becomes your downfall. You know, you notice how I always end it with like, I have no idea. You know, I don't know where it's gonna go. You know, and you just kind of speculate, but you know, always protect yourself. Piat, protect yourself at all times. Piat. So we're going to see this bounce up to the liquidity void just based off of what we've gauged over the last, how long has it been? 46 minutes. So, you know, we're just put where we go, and you would have gotten this on your phone. So, you know, I got the MACD cross on my phone, and I also got this 4 hour. You know, it says 1 time frame oversold, 3 lower time frames oversold. So if you would have gotten that 3 minutes ago, right when I hit that button, you would have gotten that on your phone. And if you had already looked at it or just wanted to play that signal, paper trade it or whatever, and see what it does, you could have just played that 4 that occurred on your phone for whatever intent and purpose that it occurred. And you got the 4 with the diamond, so that the diamond X means you got like the X means you got some higher time frames in your favor, more than lower. So what are the actual higher time frames that are in our favor? I think we already went over that, but the 12 hour must have gotten the 12 hour went back to a region that's acceptable within the formula, and even though it doesn't necessarily look at whether it's like crossing down or crossing up. It doesn't matter, it's value based. But you got to that level, I guess, with the Williams as well for the 6 hour. So you got the 6 hour and the 4 hour in your favor. Those are generally good for a bounce, by the way, the 6 and the 4 together. The 4, when the 4 gets pinned, by the 6 hour. You know, when I was doing my time frame back tests, the 4 hour and the kind of gets pinned sometimes, and you're like, why the heck is it getting pinned? And you go to the 6 hour and you see that the 6 hour is still coming down. And this is similar to, like, you know, what you see with the Williams when it gets pinned too. So they're kind of like, you know, they work together with one another. So you should use them together. So this is where we see it, and it could continue down after that, and it could fade at, you know, this region. It could get rejected here. There's no guarantees that it goes anywhere. There's no guarantees it goes up to the 618. It might get rejected at this 618. You know, there are no guarantees in life, mon ami. The only guarantee is that you'll die one day. I had to go to a funeral on my birthday on Saturday. It's kind of different. In Japan, you do the Buddhist chant thing, and then you see them, you know, in their coffin or whatever, and then they take you to the crematorium, and then I was like one of the pallbearers or whatever for my wife's grandfather, and then took them to the crematorium, and then they, like, you see them stick them in. It's like kind of like an elevator. It's like it's very high, looks like a high class hotel elevator, and they push them in the box and everything, and then they press the button like a hotel elevator. It lights up like bing, and then so it looks like classy or whatever, even though they're just burning a body. And then basically you go and have like some rice balls or some snacks or something in this other room, and then everyone comes back, and then they bring out a cart with like the skeleton and stuff, and then you gotta use these chopsticks to like take pieces of their, you know, their rib cage or their shoulder or their skull, and like put it in this container to take home and stuff. Never seen a dead body before, so that was kind of surreal on your birthday, to say the least. How y'all doing? Let's check it out. You mean the markets don't move off the shapes of the charts? No, they do not. You didn't see me draw one bull flag, right? I don't need to fumble. They call it flopping and groping in Jason Casper's Discord. You don't need to flop and grope and appear like you have it figured out. I don't appear like I know anything. I don't need to appear like... Appearances can be deceiving. Let's just put it that way. And we all know who I'm talking about. I don't need to say... Genuine is what is important. Genuine and real is what people gravitate towards, right? They should gravitate towards that. You know? And that's why I gravitated away, man. I couldn't be around the fakeness, man. Be real. Just be yourself, man. You don't need to act all the time. Just be yourself. That's what people liked. That's what I liked in the beginning. So, yeah. These are my Buddhist prayer beads. This is from a 400-year-old tree in Kyoto. It's pretty expensive. It looks cheap maybe, but it's really nice cedar. I'm not really religious, but Buddhism in and of itself is not really a religion. It's kind of a anti-religion because it's just you don't believe in anything. Nothing is real. That's why illuminated nothing, right? My quote is like, light in the absence of eyes illuminates nothing. Visible forms are not inherent in the world. They're granted through the act of seeing. So, you know, though the world and objects exist independent of themselves, they obtain no meaning in themselves, none that the mind is not guilty of imposing on them. So the world kind of, we impose our meanings onto the world, but the world itself doesn't exist as a separate thing. It's all part of you. That's why I'm really into labradorite. I was into it before and taught them about labradorite even. But, you know, you got how the labradorite interacts with light is one of the most fascinating things I've come across in science. It's just what refraction of light actually is like a quantum event, which is hitting the particles and supercharging them to a super vibrational state, which then emits their own photon in a different angle and supercharges that electron, and then that does that, and it does it about 70 layers deep, right? And then it eventually refracts back to the point where it's going back out again, and then it hits your eye. So you're basically seeing this quantum event in your eyeball, and you're like playing with the quantum realm by looking into it. So it's a pretty cool thing, and each piece has a different message, let's say. I'm a full believer in that. I think that the parallel universes are out there, and we are all one kind of entity, like a carousel of souls that just goes up and down and all around. And we take turns being each other, you know. So good luck to myself out there. There's always another you. It's just a big mirror. And yeah, it's definitely a purpose-built indicator. We appreciate your work and sharing the knowledge. Thank you. Haha, that wrecked me a lot early on trading, following everything as bullfag. Yeah. It did that to me too. I mean, like, you know, and then having a bias, bias is no good too. Like wanting to see it go one direction over the other. Like, I don't care where it goes. Who cares? Like I said the other day, you want to catch here and here and here. You just want momentum, right? You just want momentum. You want to profit. That's what momentum is like you catch the momentum in your favor and catch it when it fades, and then go the other way maybe, or just reassess, you know. But take your profits and reassess, you know, and that's part of the game. All right, so I'm gonna go to let's monitor how this would have entered. And so you got the crossover event on the baselines, right? So you got the crossover on the hourly. I didn't even notice that. I was so busy looking at so many other things trying to juxtapose it. But you got the crossover event, the baselines underneath the price. It's, you know, it's that creating that kind of rounded out shape for you naturally. So that's a good thing on the hourly. If you go to the 5 minute, and that was your liquidity grab, like they knock out the 100x, buy 100x, and then they use that to kind of go off. So you wait for the liquidity grab. That's like a check on a checklist, like liquidity grab, check. There's a liquidity grab, and there's a liquidity grab plus liquidity grab. Boom, I'm in. You didn't see me like hesitate that much. It's like you got 2 liquidity grabs and a fair value gap and a pocket up here. It's like that they're going to retrace at least a little bit into. Yeah, I think so. Well, you're getting some indecision crossover, but you got this other crossover on the. This is a 5 minute time frame, but you could have done that on the 1 minute. This is what Peyton and Smurf swear by, and I have seen their stuff that they've posted, and it's dead on the money. So you get they switch to Heikinashi, and then you get this kind of birthday candle, and you get the crossover event with the birthday candle, and then you say, okay, go, and then you enter on the next one that's a birthday candle, and then check, and then it just keeps going, and then you keep moving your stop loss into profit, and you can just scalp it, and then it just keeps going up, and then you're like, okay, we're good here, let's go to the next time frame, and you go to 2 minutes, and then it's starting to cascade and curve the cloud on the 2 minute, and then you basically could say, you start riding that up on the 2 minute and move it up to here, and then Peyton's doing the 4 minute. I think the 4 minute has something to do with where they won't kick you out or something, so he would move it to there and wait for this next 4 minute to close in this state, and then he would move it up to there. And so it might come back, but it might not come back to here, so you'd be still in the trade. And so you could either sell off into momentum and then just say you're at the top of the Keltner channel, but we're looking at a bigger play here to cascade it. You want it to cascade, and that's where you get those massive run-ups. And so you can go to the 4 hour, so you got the 5 minute, and you got the crossover on the 5 minute now. So you had all of these, you had the 1 minute cascade to the 2, 3, 4, 5, and it's just kind of cascading. And you got the weighted moving average here that it could get rejected on, and you just look at it and you're seeing, no, it's not getting rejected. Okay, good. And then you just keep going up. 6 minute. 6 minute weighted moving average is up here. It's above the cloud now. That's pretty good. But remember, they always come back to retest the cloud, so you don't think that it's going to go forever. You just kind of, you always lock in the games. You don't get hopium. You don't marry the trade. You could always move, stop loss to profit, like literally, and just be like, okay, lock it in. Lock it in. There you go. It's a winner already. So yesterday's scalp was just like, I was hoping to show you this yesterday, but it didn't play out. So what? It did go down to that liquidity zone with the passion, though, with a fervor. And you're getting the thinning on the cloud, and it was curving. See, like, check that out. It's a pretty massive cloud that just. And you got the crossover on the 10 minute now. And yeah, hopefully the liquidation levels is. So they went up and grabbed these 100x guys. See, the thing that I don't like about this indicator, this free one, the liquidation levels one, is that it has this gap here, and then if I look at high block, they don't have that gap. I mean, I guess they do. Let's just juxtapose it to see how accurate it is, because they're both Binance, right? So this has, and they have a short that just opened for 3 million right there, so that just fueled the fire up more. Thank you. He just threw some kindling wood onto the fire. It's like, oh, thank you, mister. We'll just go. Oh, it just decreased to 1.13. But it stops at let's just see the price. It stops at 22,515. So at 22,515 would put you 515 would put you here. But you still have this whole like region here caked with. So where is this? Where are these trades? Why are they not on this? Why are they not filling this gap here? Like I've noticed that it's not like 100%. There's stuff here that they're not showing for whatever reason, and there's stuff here they're not showing. And there was a time I was saying that it's like the cache. Like you get a RAM, your RAM gets full or something. So like the RAM, the cache of what they can display, they're displaying all these past bubbles too. And so the past bubbles and everything all together all at once is like filling it up and lagging it, and it can't process everything. And so you only get so much on that time frame. I mean, for a free indicator, it's still amazing. I'm not complaining by any stretch of the imagination, but it's just not as precise or accurate as it could be. There's got to be a way to make it better. In the future, I'd like to dive into how they do that. I know how they get the API data and everything, but I don't know how to code Python well enough to do that just yet. In the future, perhaps, but they came down, grabbed all the 100x, they did their 100x grab, and now they came up and they're getting the 100x on here. And so I use it from the 5 minute and lower, and as we showed in different live streams, how you have the bubbles that are kind of stacked up more in more frequency here than here. It just gives you that like idea of where they're going to immediately grab. And then if you coincide that with all the higher time frames and stuff we went over earlier, then it gives you that like, sniper entry of sorts. And if you coincide that with like Fibonacci and stuff like that, then you're golden. You're good to go. Today there was no like Fibonacci at all, but the liquidity pools suggested that this coming up to here is not out of the question on a hourly 4-hour scalp. And then so let's see how we'll turn off. I'm going to turn off the liquidation levels, and then we're going to go to look at the hourly time frame in terms of how it curved, like what we were talking about with the interaction. So the interaction, how does the interaction occur, and like in real time, like what I said was going to occur, did it occur? And let's see if it started to curve based off of those things. So we said that the 30-minute was coming back into and possibly getting the kiss from the hourly and the 4-hour. Wait, was it on the hourly or was it the 30-minute? I think it was the 30-minute, sorry. Yeah. So you had the 30-minute coming down. This is the 15. The 15 jumped off the hourly. So it was the hourly time frame. So you had the 4-hour coming down, and we were talking about the 30-minute curving off of and then creating these curves or whatever. And then so we started to get that curve on the 30-minute, that kiss on the hourly time frame. And the hourly kind of injected some love back into it to curve it up. And then you see the 30-minute now is curved, and then the 15-minute, the hourly is curved up, and the 15-minute went beneath the 30-minute to like push it up as well. So you had like the 15-minute in conjunction with all of these things. The 15-minute was a mess, so I just skipped over it. But yeah, you just look at the things that make sense. You don't need to like look at everything, not everything. Some things are just noise at that moment in time, so you don't need to look at all things. And we'll just leave it there. Like, once again, you protect yourself at all times, and then you see what's happening. Is it getting rejected off the ATR? If it goes above the ATR on the 15-minute time frame, then you're basically gonna switch, and it's gonna put it beneath you for where you would be looking to see if the trend shifts to the short side. So we still haven't shifted to bullish until this closes above the 22,452 region. So until it closes up above here, you're not really, it could just be a fade to get those 100xers and then continue. You never know. And sorry, why did I do that? So we're looking at, oh yeah, we're gonna go back to the 4 minute and see how the 4 minute close. So you would then move it up to here, because this is another birthday candle that closed that way. And then you just see if it continues. So you move your stop loss and your profit up here. And this is how you scalp, you know, and then you can just trim some or whatever, you know, if you're doing like 50x or something like that, and then you just take 25% off the table, stop loss and the profit, and you just compound that idea over and over again. You protect yourself, you put up a barrier as you go, you know, and then you don't build that FOMO mindset, and you just kind of like ride it up as it goes, and then sometimes you get that cascade event, and then you're golden, and you don't need to wait around. And then like literally, I've seen people that, yeah, there you go, and you got knocked out there. And then you can go to the 1 minute and say, is it curving on the 1 minute? Yeah, and you sure enough had that on the 1 minute. So you could have just taken it up to the 1 minute, and you could have just been, that's enough for me, and then wait for it to cross back down, and you could re-enter on the kiss of this cloud too. You know, if you believe in it enough. But we're gonna leave it there for today and bid you adieu. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Make sure you do your part to take care of you and yours and take them to the upside. I'll catch you guys on the next live stream. Peace.